And good evening. This is the Eye of the Storm podcast with the big picture technical update for the S&P 500. It's being recorded on Friday evening, April the 19th, 2024. It was a pretty solid week. It was a crazy week. We saw all kinds of strange moves happen. We saw geopolitical situations come to a head, partial, possibly. But we've got a brewing storm in several places, and we're trying to interpret what can the market do accordingly to our economy, to where we stand right now, to where the markets are, to the narratives, etc. There's a lot of things going on. And the market actually is in, excuse me, some transition. Now, what we're trying to decide right now, what type of a transition is it in? Is it in a minor fourth wave transition, which still sits out there, by the way, and I will update that. Or are we looking at a much stronger beginning to a much larger declining phase in the way of a primary C wave decline? And that would be to complete a cycle fourth wave correction, which began off of the highs of 2022 and included new all-time highs here in the S&P and also in the NASDAQ and also in many of the other indexes, particularly in the Dow. But the market itself produced an irregular B wave. So it went up to new highs above 2022. And that's, has its own interpretation. I'm leaving it with a B wave, and that what I'm looking for now is a primary C wave. And I think there's a lot of things that fit and kind of point to. Now, under this count, which I'm going back to and I'm showing you today. So basically what I'm kind of come down to is I have two. One, that primary C wave is starting now. The other, which I ran and showed all last week, was that it was a minor fourth wave. And we still had a minor fifth wave up to new all-time highs before. So we had another visit going higher. And there is a case to be made that that still exists. So let's kind of dive in. Let's just try to catch up. What we saw today on our expiration, we saw that put wall get smashed. And the fact is that it really kind of got hit harder. They tested it just after the opening because of the AM expiration, which I believe expires after the first half hour full of trade, something of that nature. So we had AM expiration here in the SPX. And then afterwards is where it went down and it broke solidly below that put wall, which was much smaller for the afternoon. Still existing, but much smaller. And then there were subsequent put walls in other various ETFs and et cetera, and those kind of got smashed. So there was plenty of serious selling going on, and we saw it really, the strange thing, here it is. The Dow was up $211. The NASDAQ was down $368. So with the Russell up and the NASDAQ down, the S&P down. So it truly was a mixed bag in terms of expiration. It truly was quite fascinating to watch them kind of decapitate a couple of very popular Mag 7 stocks. Now, either they've done that so that they can do it all again and just take it right back up to that dreamland of NVIDIA above 900, in super microcomputer back above 1,000, back above 1,100, and stocks like Meta, get it back above 500, get it back above 550, etc. We have levels now. Netflix back above $630, please. So we're seeing things kind of get decapitated, but you've heard me speak about that. I do believe that a lot of these companies, they're not bad companies. They're showing that they're making money, but it is going to be kind of coming in, because it's not that the company is bad, but it has to make adjustments as the surroundings change, and those would be the economic surroundings, the consumer spending, the banking system, the downtown, just everyday life. As that changes, so will the revenue streams. And a lot of these different companies, because people have to be more cognizant about their money. Now, lots of money available, so again, these guys do well. But they're not bad companies, they just have to make adjustments for being overbought, a little bit too rich. In other words, it's like, do we really figure? I know they have models that tell you if the earnings continue to go to this level times X produces this number. We put a target on this stock at enormously high numbers. And then the challenge is like, Mr. CEO, talk it up, do whatever you got to do. But the thing is, it's like, it's time to just pull that all in. And now we're seeing that. We're seeing like a solid day where NVIDIA got whacked. It was down 85. And so we saw, the 900 all the way down, over $100 worth of strikes got wiped out. Unless, of course, you hit the put. And that is where put walls come in. And that is where suddenly you get acceleration in some of the selling. And it's like, ouch. Because they can't get them back, or whatever the situation is, it's like the quickest thing you could do is sell, because you're just getting longer and longer and longer and longer. And so you got to be selling into that weakness. Now, let's just kind of take a look at the SPX. If the high that we saw at 52.64 was it. So that would suggest that we are complete with the minor fifth, the intermediate wave C, and the primary B wave, and we're in the beginning stages of a primary C wave down. That primary C wave will consist of 5 waves of intermediate degree, that's the yellow, and that will be 1, 2, 3, 4, 5. So within that, we're in the first minor wave down, and within that, we're in the first minuet wave down, and within that, we're in the first sub-minuet wave down, and this all will build out to become a minor 1. So we have 5 waves of minute degree, and so we're just really, I may have to go minute 1, minute 2, minuet 1, minuet 2, etc. But right now, I'm even putting it a little smaller. Let's go down, take a look at the hourly chart. We can start to see the inside and how I'm counting this, and you can see how, it looks like a bunch of lines, but there truly was a lot of order into this, and you can kind of see how it kind of went out. So what we have is there's the high. So the first down, it's like 1, 2, 3. It really kind of could do a 1 to there, but this was really strange. So I went 1, 2. And now we're starting into the first third wave. And in that we have 1, 2. And now we're starting into this third wave. So it's the 3 of the 3. So we immediately drop into a 3 of 3 type move, right? This 3 of this 3. And we count again. 1, 2, and then this is where we get all 5 together. 1, 2, 3, 4, 5. And then ABC 4, and then a 5. So follow me again. 1, 2. Now we're going to count out the 3 of 3. 1, 2, 1, 2, 3, 4, 5, a 3, 4, 5 of 3. Okay, so this 3 goes here. And now we get another 4, and we get a 5 to finish this 3. And then another 4 and another 5 to finish minute wave 1. And if I have to up this count, so these are minute degree, then it's going to be minor wave 1. Down in the bottom. These are minute and these are minuet, then down at the bottom will be minor wave 1. And we're not there yet. Now, while I have it open here, laying bare before us, let me show you in the other count, if indeed, just go back out quickly to that 4-hour chart so you can see it. If indeed this is minor 3 up here, and this is a minor 4, yes, we broke it. Yes, we're coming down. But in essence, the wave one remains down here. So it's pretty far down, or at best, the highest I could put is up to here. And this would be 3, and then we're in a 4. So it's not blown anything totally out of the water. It's coming down pretty far. But it's just getting into where it's hitting that 4 of 1 lesser degree. So with that in mind, if we're counting out a minor 4th wave, let's go back to that same hourly chart. So that being minor 3, A, B, and we're in wave C. 1, 2, and it counts out exactly the same, folks. 1 of 3, 2 of 3, 1, 2, 3, 4, 5, 3 of 3. Well, actually 3 of C, excuse me. And then we get a 4 and a 5. So let me do that over again. A, B, 1 of C, 2 of C, and now we're counting out 3 of C. 1, 2, 3, 4, 5, 3 of C, 4, 5 of C, minor 4. So what would have to happen if that's the case? We would just thrust. Actually, it's not a triangle or anything like that, but we would just move sharply higher. A bid would come in, and a bid would come in pretty quickly, right? So that means everything else needs to calm down. Everything else needs to be okay. But that doesn't mean that technically and algorithmically, the things aren't set that we might gap higher on Sunday. Again, dependent on what the geopolitical situation does or does not do over the weekend. That remains active. So whatever happens, but these are the 2 scenarios that I'm now sitting with that actually 50-50 chance, because it is still within the realm of reality on a technical basis to see the release of all the gamma, the release of all the delta, the release of the volatility, and then the volatility to come right back on today. Got a lot of some selling in it, and then today, bam, no, boom. And so volatility, not going through the roof by any means, but still, so these adjustments are affecting buying and selling of underlying, buying and selling of the indexes, buying and selling of the ETFs, of the individual stocks. And those are really being twisted and turned around by what's happening in the options. What we saw happen today in NVIDIA, in in Meta, in Netflix, happening basically overnight and then just coming in and your underlying is knocking it down. So you maybe started to hedge because you knew what your position was. So you started selling an index, you started selling the stock as soon as it became available. So by the time a lot of people woke up today, it was like, oh crap. Because all you had to do now is, as this thing really starts to slide, is just sell it. So you continue to sell the stock and you're just locking in, and there's a lot to do, but when things are moving that quickly within because of an options expiration, it's like some people are getting hurt, of course. Now, there's both sides. That's in the SPX. That closes at 4 o'clock Eastern. The future continues to trade. So let's go take a look at the ES and see kind of what that extra hour may have done. Look what it did. It gave a rally, right? So this is overnight. This is saying Friday at 6 a.m. And then we kind of come slamming back down. This is not right. So, but we're on the 1 hour chart. And that's yesterday at 7 o'clock. So we made a low. In any case, here's the count. Here again is if everything is all done. And we have 1, 2. And then we have 1. Oh, I'm missing my 1. There it is. And that should be actually right there. It's fine. 1, 2. And then we count out 1, 2, 3, 4, 5 of 3, 4, 5 of 3. Maybe it's done. There's a possibility that this 3 is actually going to be down here. So we have 1, 2, 1, 2, 3, 4, 5 of the internal 3, 4, 5 of this 3. In fact, that is what I'm going to do. And so this could be the 4. All right. The A, B, and we jog up on a C wave for wave 4, and there are your metrics or your fibs. I would like a quick pop back up to 5086, and then we come back down again to put another 4 in. That would be to put another 5 in, excuse me, which would then finish this. So I actually think we're not there yet. I think we're still got this 5. So if let me do that again. 1, 2, and then 1, 2, 3, 4, 5 of the internal 3, 4, 5 of this 3. Yeah. So this is yet to be done. And sorry about that. I'll just move that around. And these fibs are going to change a little bit because this 3 is going to come down to here. So the 5 is not done yet. And that 3 isn't in yet either. Sorry about that. I always think I get it all done, and then it gives me a little bit of a trip. I'll put that 3 down there. Well, let's look at the internals yet again, okay? 1 hour. So we have a 1, 2, and then 1, 2, 1, 2, 3, 4, 5 of 3, 4, 5 of this 3. Then we have an A, a B, and a C, which is not done yet. And again, now we don't need that high. So I'm going to take this one out and rerun my fibs. I'm probably not going to get up quite as high. 5075. So it's just a slightly different. But here was A, B, and we get a C, and we put the 4 on that, and then we come down for a 5. And then once we have that, we can run the 1 to the 4, and we can get where we have downside for this third, the minute third. So here in the S&P in the future, I'm counting it in the minute degree. So it's minute 1, minute 2, minuet 1, 2, minuet 3, minuet 4, minuet 5, minute wave 3, a 4 and a 5, minor wave 1. So that's if it's all done. If we are indifferent, and this is like an A, B, and this is a C wave, then that minor 4 still exists. And there is a possibility that we have another quick finish down or quick finish up and then down to put in the 5, or it just really keeps going and really starts to break down where the 4 no longer works. Now, where would that be? Good question. It's going to be down here still, which is at there. It is at 48.94. So far, we've only gotten down to 49.73, I believe it was, or 49.63. Let me get right to there. 49.63, and it's down at 48.92. So, yeah, not a whole lot of more room before that fourth wave kind of loses it. It loses its power, I believe, because we will be taking it out wave 1. So therefore, that becomes 1, 2, 3, 4, 5, and then it certainly could take out wave 1 and it could just keep on going. And that would be under the other assumption that we're in 1, 2, 1, 2, and there's 3 and a 4. We get a 5 for the 3 and a 4 and a 5. Now, that would be also very possible, again, because of the geopolitical situations we got brewing everywhere. You know, this is just big. We're seeing a lot of things. I mean, economically, I'm telling you, even though they come out and they tell you, oh yeah, we've got some new tenants going into a mall, which was it's a very big indoor mall here in San Francisco, and it's like basically empty. And it was producing tremendous amounts of tax revenue for the city and county of San Francisco. Now, this thing, supposedly, they don't tell you which ones or how much they're taking, but they have 3 new tenants, supposedly. So they're saying, oh yeah, revitalization. So they're pushing the narrative and they're doing all that. And the thing is that commercial real estate is, I don't want to call it a fire sale, but it feels like it. From what got paid most of the time just prior to the pandemic, and how a lot of these commercial buildings, these big office buildings, are selling for a half or a third of what they did in 2019 or even prior, from the last sale. And so that, I think, is going to present a really severe problem that could toss the cookies of the market. And because it's just, when people aren't ready for a big jar to the economic system, it causes a little bit of havoc. And maybe we got another one coming. So, and that would really toss these cookies right over. Now, I prefer to stick to the technical picture because then I'm trading it every day. Because honestly, the mindset is going to be real strong here. Because if you really had to go on and say, well, this is going to happen, that's going to happen, what happened? You really might as well just toss it all in and say, okay, it's the end of the world. Well, who cares? Literally, right? That's kind of what could be on the line. So what do I want to think about? I want to sit here and trade. I'm expecting the market to go down, but it's not going to go straight down. It will feel like it sometimes, and you'll make more money on those days. But there's going to be money to be made, and you might as well do something while we're waiting for all of this to kind of settle out and get ready to maybe do the next thing. Now, that's kind of what the Elliott tells me, that we go through the stronger decline and a primary C wave, setting us up for a cycle wave 4 bottom, and then we should roar right up and out of it. And there should be plenty of reasons to do so. But we got to get through the crap first here, folks. We're just, in my opinion, maybe just beginning that crap. After a great deal of narrative that just told us nothing but, hey, the world is wonderful and so are we. Okay, so that's kind of my picture for the S&P. We of course we have economic numbers, and of course I don't have my screens open, so I can't really see it. I'll be updating that on Monday with the Elliott Wave update. But we have 2 counts. They're both sitting at preferred status. One, so 2 counts entered, 1 count leaves. So if you're a Thunderdome fan, 2 counts enter into the dome, but only 1 count leaves. And so we're really getting ready to find out which one is more likely going to be the winner here. And I think it's like we're close to break points where minor wave 4 kind of goes, and it leaves us with this one. In my book, it leaves us with this one. I'm still going to wait for the market to tell me. But as I let this all trade out, it starts to make itself clear. So still a lot to prep, still a ton of trading. Again, just taking this out again here. Let me just kind of put them on. That gets a little sticky. I have it on the SPX, and that's where we're going to go. In the cash market, 1.618 is 31.17. That's cash, 31.17. There'll always be premium in that future. This is going to be higher. Not the end of the world. By far not the end of the world, but a good starting point to double. To double. Go up to 6,000. Go up higher. To double. It'll be a cycle 5th wave, and you'll be finishing a super cycle 3rd wave. Then all hell will break loose. So, any case, that's it for the SPX and the S&P 500. The next update will be the Elliott Wave update on Monday, the 22nd of April. Have a great weekend.